Hey, what's going on, guys? Today I'm going to talk about Lowe's and specifically how much 100 shares of this company will pay you in dividend income. So let's go ahead and dive into it here. So this is Seeking Alpha's website here. I really enjoy using their platform. They have a really good different views and a lot of different data points that I like to look at when evaluating stocks. So definitely go check out their platform. They do have like a free plan, and then they also have a premium plan. I'm currently just on the free plan, but yeah, there's two options there. So looking at Lowe's currently, it's trading for $241.40. So just first glance to purchase 100 shares, you're going to be spending over $24,000. So yeah, so this is a company that I'm trying to slowly build a position in over time. I don't have $24,000 right now to invest into this one particular company, but yeah, I am trying to build it up. I do a lot of shopping at Lowe's. Unfortunately, being a homeowner, Lowe's is one of the closest ones to where I live, so I am constantly going there for various items. So I thought it would be cool to also build up a position in this company and kind of get back some of the money I've spent over the years at this company in the form of dividends. But needless to say, let's go ahead and look at the data here. So currently, it's not a huge. It is more than the S&P 500. S&P is around 1.7 as of what I was looking at yesterday. It's like 1.91%. Market cap's pretty big. Obviously their biggest competitor is probably going to be Home Depot. Uh, but yeah, so needless to say, EPS, earnings per share is 12.22. Their PE ratio is 19.75. They pay an annual dividend of $4.60. So we can quickly assess that, how to calculate 100 shares, right? Let's see if I can pull this over. So obviously, $4.60. Bring this up here. Clear this out. $4.60 times 100, you're gonna get roughly $460 per year, and then if you multiply that per quarter, you're gonna get right around $115 per quarter in dividends. But once again, you can also sell covered calls, and Lowe's is a company I like to sell options on. So looking at the performance year to date, it is up 8.47, so it is underperforming as far as the S&P 500 goes. The past year, it's up only 3.04%, and then the past 5 years, it is still doing really well. Up 130%. Past 10 years is up 381. So yeah, look at the 5-10 year mark. It's been very impressive as far as the performance goes. I think the inflation has really kind of beat up this company and other companies in the space the past couple years as far as rising costs of stuff and inflation being so high, but it still is in the green for the year, but it has been underperforming a little bit there. Yeah, so let's look at. Yeah, so you can't see all the ratings in here, but it doesn't look to be really great, as far as the growth and valuation. The profitability is really high, but yeah. Look at the financials. Looks like they only go back to 2020, but they have been growing their revenue 72, 89, 96, 97. It does look like it pulled back this year, to 80, 87, 86,377. So that could be, a good indicator as far as why the stock is kind of not performing so well more recently. The revenues, gross profit, yeah, pretty much everything across the board is down compared to what it was last year. So they recently reported earnings back in May. Looks like they are about to go on like another earnings call next month, August 20th. So definitely keep an eye out for that. It's going to be the pre-market. They're expecting earnings per share estimate is $4.01. EPS gap is expected to be 4.02. Revenue is supposed to be 24.04. Yeah. Okay. Looks like they beat last quarter by $256 million on their revenue, and they beat these other two metrics as well. Look at the dividends. Yeah, so their next dividend date actually just passed last week. So unfortunately, you're going to have to wait a whole until the next cycle. But they did go on ex-dividend date July 24th, and they're going to be paying out next week, August 7th. And they will be paying in the amount of $1.15. So we had mentioned that earlier, that you can expect to receive, roughly $115 a quarter. Payout ratio is 35%. Dividend growth rate 17.46%. So that's pretty awesome. And then they've been having dividend growth for 60 years. So that's incredible as well. Obviously the stock has performed very, very well. So that has definitely been a reason, and been a thing that's definitely helped Lowe's continue to increase their dividend. Yeah, so some more data here, looking at free cash flow, operating earnings yield, 5-year yield on cost, 3-year yield on cost, 1-year yield on cost. Some just more metrics here. Dividend growth, 4.76%. Looking at the 3-year, 19.62%, 5 years, 17.46%, 10 years, 19.18%. Yep. Dividend safety, according to Seeking Alpha, their cash dividend payout ratio is considered a C at 30%, when the sector is on average 28.3%. Yep, a little bit higher there. And then it looks like premium kind of locks out the rest of these. But yeah. Consecutive years of dividend growth, 60 years. That's incredible. I was not aware of that. They've been paying for 60 years, and every single year they increase it. So this is just 2019, but they went from 48 cents to 55 cents to 60 cents. That's a big jump. 60 cents to 80 cents to $1.05. Goodness. They chilled out a little bit, $1.10, $1.15. Yeah, so it looks like they just increased, from $1.10 to $1.15 more recently. Okay. Yeah, so based upon, this is interesting, they have a consensus dividend estimates for January 2025. It looks like it's $4.54 versus, what is it right now? It's $4.60. 2026 is $4.79. So they are kind of accounting for and kind of predicting, if they can continually increase it at these rates, that it is nice to see your dividends continually grow year after year. Getting a raise as an investor by not doing anything definitely beats the 2 to 3 to 4% you get every year with your 9 to 5. Valuation, once again, Seeking Alpha only gives us these two top two fields here at C minus and C. So it looks like, according to those two, they're a little bit higher as far as the PE ratio goes for other companies in their sector. PE ratio stuff. Revenue growth. Yeah, so like we'd mentioned, year on year, it looks like they their numbers were down compared to last year. Looking at like their negative 10% revenue growth year over year, revenue growth for the forward growth rate minus 3.48%. So yeah, definitely lower than other stocks in that sector for sure, as far as that goes. Profitability, it looked like the profitability was really well. B plus. Gross profit margin, 33.27%. So they're a little bit lower than, some of the other ones, but the second metric looks to be pretty good. The momentum in the 3 month has been pretty well, 5.88% versus the sector at 2.62%. Yeah, like I talked about, Home Depot is definitely the biggest one in this space, according to market cap, enterprise value, employees. But yeah. I'm not sure what WSM is, but they've been looks like they've been killing it as well. I'll have to look that up. They have been crushing it. Yeah, another cool thing that Seeking Alpha has, they not only have the price return of the stock, they also have the total return. So including, dividends reinvested. So let's look at what Lowe's is. Just the price return is 3.04%. But if you plug in that dividend, you can see that jumps a little bit to 5.18%. So good stuff there. Same with Home Depot. Home Depot's been doing pretty well. Price return, 8.94%. Total return, 11.81%. So yeah, good deal there. And then options, like I talked about, they do have weekly options, so they could be, potentially a good company to sell options on. There's some decent volume here, nothing like the SPY or QQQ as far as volume, but there is a good amount of volume here, so there are opportunities. Yeah, so one day, once you get 100 shares of Lowe's, you can definitely leverage it a little bit more, or you can immediately start selling spreads. That's something I've been thinking about doing as well. Until I get to that 100 share mark, I can start selling put spreads or call spreads, or kind of do both with the Iron Condor. I've been thinking about that as well. And then charting comparing to the S&P, yeah, so it's definitely underperforming the S&P 500 year to date. Let's see if we can get. Well, it's not going to show us the total return. Those are metrics. I guess percentage is the best looking one. Yeah. But yeah, needless to say, it has been underperforming the S&P 500 a little bit there. But yeah. All right, guys, to wrap up today's video, like we talked about, to purchase 100 shares of Lowe's, it's going to cost you, $24,000 ish at today's prices. As far as July 30th, making this video today. Oh, July 31st, making this video today. So it's going to cost you $24,000. You're not going to get a huge dividend amount, but once again, the ability to get 100 shares is very important in my opinion, because you could then start tapping into covered calls. So $4.60 times 100, like we mentioned, you're going to get $460 just in dividends. But they are growing that pretty significantly, or they have been historically. So a nice anywhere from 5 to 10% increase every year is definitely nice as well. But then you also can, like I mentioned, leverage covered calls. However aggressive you want to be with those, you can definitely add some more yield in your portfolio. And then, obviously Lowe's is a growth company, in my opinion. Just looking at the chart, it's up 381% the past 10 years. So yeah, so I view that as a growth company. And then they're also paying, you know, a pretty healthy dividend yield at 1.91%. So almost 2% there. So yeah, guys, let me know what you guys think down below. Is this stock overpriced in your opinion? Are you an investor of Lowe's? Do you spend as much money at Lowe's as I do? Would love to get your guys' feedback. And if you guys are still here, very appreciate it. I know it's a long video. Kind of went a little bit more in depth looking at some different numbers here with Lowe's. But yeah, guys, that's going to wrap up today's video. Please like and subscribe down below.